want to learn how to manage your own investments? Are you ready to stop paying investment management fees and start building wealth? The DIY Investing Podcast is dedicated to providing you with the knowledge, skills, and resources you need to be a better investor. Learn how to make investments through the use of fundamental analysis, mental models, and business management insights. Now, here's your host, value investing expert, Trey Henninger.
Hello and welcome to the DIY Investing Podcast. My name is Trey Henninger and I'm your host. This week I have a special guest on the show, Dan Schum. Dan blogs about his investing research and strategy at NoNameStocks.com. Dan has written about stocks since 2015, has inspired many investors in the microcap and dark company space, including myself. Dan, welcome to the show.
Thanks for having me on. It's great to be here.
So, Dan, you've mentioned to me before that you have a similar investing style to David Flood of Elementary Value, who I had on the podcast in episode 48. But for the clarity of our audience, how would you describe your investing process in your own words?
I try to focus mostly on stocks that I don't think other people are going to look at. And so when I started out, I was looking at these big companies because that's what I was comfortable with. You know, Microsoft and Oracle and these other big stocks just because I knew them. And then the more I got into it, the more I just started to question, think about who I'm competing against. You know, and if you're looking at these big ones, you're competing against everyone in the world and all these PhDs and MBAs and hedge funds. And so I just started going smaller and smaller. And I found it's easier because there's less news to follow. And there's less movement, information movement, and there's just less people into it. So I started going smaller and smaller, and I eventually got more and more illiquid until I found companies that are so-called dark that don't file with the SEC anymore. And so some of my portfolios in those, not quite all, but mostly I try to find companies that are kind of in this group, so I'm fishing in the right barrel. Like I want a very small company because that's going to give it more room to grow. I want a very low stock price in absolute terms. Like if someone gives me an idea for, say, a $20 stock, I'm probably going to throw it out just because the lower the price, the easier it is for it to move. You know, it's a lot more frequent that you see a penny stock double than, say, $1,000 stock. I'm also looking for low share count because when it moves, I want it to move a lot. And so the less shares there are in the float, the easier it is for stocks to move. And so that's where I'm trying to put myself. And then, you know, ideally like high inside ownership, low debt. You know, a lot of the companies I look at don't earn anything. Probably most of my stocks lose money, I guess. But it's when the perception of the public changes from this losing money company is dying to maybe it's not dying, that you can have some big stock movements. And then every once in a while, you might have one that not only doesn't die, but thrives. And then you can really have big stock movements.
So how do you have confidence you're going to make money if most of your stocks lose money?
Because, well, for one thing, I diversify. So I'm not focused on like a small number of stocks. You know, when I first started out, I thought I would be, and I was at the time. But then my biggest holding lost a ton of money, and I lost a lot on it. Stock went down, and I sold it at a big loss. And then I started going more and more towards what I currently do, which is pretty heavy diversification. I have kind of one exception right now, but I own like 60 stocks. And ideally, they would all be equally weighted. So if any one of them, I know that some of them are going to die. And I have some that are dead. I have one stock right now that I'm pretty sure they don't exist anymore. The stock still trades every once in a while. But I don't think there's any company there. And I've lost over 90% on a number of stocks. But the winners can make up for it. So I've had several stocks go up over 1,000%. Quite a few do more than double. My biggest winner is up almost 7,000% or something now. I don't know. But it all comes back to one idea, which is that like over the long term, a lot of these small companies survive. And so if you just look at the price chart of like all when I'm shown a stock, I'll open up the chart. It's like step one always. And if you look back 20, 30 years in a lot of these tiny companies, you can see the peaks and valleys of their business. And they'll go real high, $5, $10, $15 for the stock as some product they were selling was hot. And then that dies off and the stock drops down to nothing, pennies. And at that point in time, the stock has dropped because all these people see the revenue going away. They see the company's heavily focused on whatever product was that fad. And as that goes away, there's a lot of uncertainty of the future. But a lot of the companies make it through that. They shift gears, they cut costs, they lose money for a while, and then they try new things. And if something catches on, it can really push it up. If you have a stock that's like a market cap of $1 million, it doesn't take like a major breakthrough for that to double or triple. Mm-hmm. So a lot of these little companies also, they don't have very many people, so the operating costs are low, so they can kind of keep plodding along. And if you hold them long enough, and if you buy at a low spot on the chart, then I think you oftentimes have a good chance to have the opportunity, at least, to make some money. And whether you can catch that rise or not is another story. But so that's what a lot of these companies do. And that's what I'm trying to do, is catch the ones that are going to last, and they're just in a temporary lull.
So I think the interesting thing with this is it's kind of hard for me to put this in a bucket. A lot of times when you're thinking about an investing style, you want to put it in a bucket. Well, is this value? Is this momentum? Is this deep value? And it sounds like you don't really fit in, any one of these buckets, because on the one hand, you're talking about these would certainly fit maybe one type of what a deep value person's looking for, but you're spending a lot of time focusing on that chart. Do you see yourself in one of these buckets, or is it just more, hey, this is what's worked for me?
I think people get in trouble because they focus on one bucket, and then they define themselves as that thing, and they can't move outside of it. And so I don't think anything works all the time, and everything works some of the time, right? So what I'm trying to do is combine different things that I think work. So I started out thinking myself, I'm this value investor, right? Well, but that's not really pragmatic, because like you have to look at the charts. You have to look at what the market is doing. That's what's showing you the demand. That's what's showing you like what the rest of the world thinks of this stock. And if you're just closing your eyes to that, then you're only getting half the story. You can look at the numbers and think that it's cheap at this price, but the chart tells you where it was, and the chart tells you where people think it's going. And so I've moved to, I guess, kind of in the middle between kind of a deep value investor, chartist, gambler. Some of mine, like I said, I own some stocks that I think are dead. I own some that I think have a low probability chance to pay out really high. And so it's kind of just this binary gamble. So it's hard to argue really fits a value, but
yeah, so if the stock's dead, you just keep it, right? Because it's probably worthless, basically. So if it turns out not dead, then that's great. But otherwise, you just keep it in your portfolio, because what else are you going to do with it, right?
Yeah, and then you follow it, and then for me, if I sell it and it's gone, I'm not going to follow it anymore. Yeah. If I hold it, even if it's a small position, I'm going to keep reading the filings and the press releases. And at some point, that company they're either going to really die, or they're going to try to do something to change and survive. And maybe that thing they do actually catches on. Okay. But you won't know unless you're following it and you read it.
Yeah.
But I have some positions that are like $50, like because they've gone down so much. Because it's just nothing.
So they didn't start at $50.
No. But yeah, I have some that are tiny.
So, how do you find dark companies? You're focused on an area where no one else is interested in, or no one's relative, because obviously other people own these companies, but very few people are writing about these type of companies, and you always tend to find something new and different. So, like, what's your preferred method to find them?
I'm very lucky in that people send me ideas. So I don't do screening. When I started out, I was reading books. I got some ideas from that. Then I started to find these different blogs online, and I found Seeking Alpha. And then, I started following. You find someone you like and you think they're good, and you follow them. Then you follow the people who comment on theirs, and you follow the blogs that read that blog and all that stuff. And you end up building this big list of people you follow. And that's how I got ideas. Years ago, when I started out, that's what I was doing. And then eventually when I started my blog, I didn't really expect it, but people email me ideas, or on Twitter or whatever. They'll say, oh, you like this one? How about this other one? Because, they think if I like one that fits their style, I'll like another, or whatever. But most of my ideas come from one friend. Like I met a guy who found my blog, I don't know, 4 or 5 years ago. And he emailed me and then has become a mentor. And he's a broker, and he's been doing this for decades, and he knows everything, and he's seen everything. And so he sends me ideas as well. Just like, hey, check this out. Oh, did you see this filing? So-and-so is interesting. And then when I write a blog post, I'm always trying to write something that hasn't been written before. I don't like talking about stuff that other people are talking about. I don't like repeating myself. So I try to make every post a different chapter in the book and come at it from a different angle.
Gotcha. So, I mean, that's why I guess it makes sense then. So even if you buy a stock, you're not necessarily going to write about it if, there's a lot, it's already been written about on a few of the blogs you follow then.
Oh, for sure. Yeah. Or if I buy it and it's just kind of boring and I've told the story already. I mean, I've already told the story of the cheap dead stock that I'm holding and hoping that something happens. So why tell it again?
Yeah. Because unless something happens, right? Yeah.
Right. Once something happens, or like if it's cheap in a different way, or something interesting happened a year ago that I think might indicate something. I mean, but I'm always trying to write something that would be, interesting for the reader. And a lot of times I end up with these, you end up with the dark stocks because they didn't used to be dark and you just held them long enough. Yeah. So I have a few that have deregistered, and then, okay, well, now I have this dark stock, and I just try pestering the company and hoping they communicate.
Yeah. So how do you handle those behavioral aspects of buying companies no one's heard of before? I mean, do you struggle with that? Is that something that you worry about when do you talk to people about what you own, or they're not interested because it's not Apple? I mean,
nobody, I don't know anybody who's into stocks. I don't really talk to people about stocks except maybe on Twitter or email, but it fits my personality. I don't like, in school, I always sat in the back corner. Mm-hmm. And I've always done best by myself rather than in the group setting. And so I feel more comfortable buying something when no one else is talking about it. If it's being written about, or if I see chatter about a stock, even from people who I think know what they're doing, I hesitate with it because I just feel like I'm just less comfortable with something that other people know about. And I would rather have something that nobody else knows about.
Does that include the blogs you say you kind of follow, or is that still where you said that's still like your mining ground for ideas?
Yeah, I still get ideas from blogs, and I guess it's a lot less than I used to.
Gotcha.
But, for sure, for me, it's the more talk I see about a stock, the less attractive it becomes to me. It's just, I think, personality. No. But I have no problem with buying these stocks, and then there's no news oftentimes. Some of them, I wish there was something more, but they only put out an annual report. So it's hurry up and wait for 12 more months, and then you get to see the next numbers.
Yeah, there's a dark stock I own, and basically it's well, I read it 1 year, didn't think it was good enough to buy anything, so I was well, I'll wait 12 months and see what the next annual report says. I read that one, I was hey, things, they doubled their earnings, I'll buy some here, but then I'm well, It's only worth 5% of my portfolio with that earning. So I'll wait another 12 months and see if I can buy more and just, I don't know. I'm still getting used to it. Basically, I'm a lot less far along in the journey down the dark cavern of dark stocks, but
it also fits like my time that I have available. Like I have a full-time job. I'm an engineer. I don't do anything financial related for a living. And then I got 3 kids. I got a wife. So like my time to do all this stuff, it's really a hobby, and I invest my my retirement money. So I don't have that much time to be following something that requires a lot of upkeep, So if it only puts out information rarely, that pretty much fits with how often I can actually look at it.
So I think, that statement combined with my next question here about performance probably is counterintuitive to most people. You disclose your performance on the blog, and from 2013 to 2016, you basically matched the S&P 500's stock performance. But since 2016, you've trounced it to a degree, such that when you combine the two, since 2013, you say you've returned basically a CAGR of 46% per year compared to the S&P's 13% per year. So when you think about that, though, you're spending a little bit amount of time, and in a lot of areas of life, people think, okay, well, the more time I spend on something, the better my results. And you certainly are competing with, let's say investment professionals that are spending 80 hours a week and, losing the S&P 500. So, I mean, can you maybe make sense of that for people? And, what do you attribute that outperformance to, if not the time you spend on it? And basically, did anything change between your process before 2016 versus after?
So first of all, the time spent is cumulative, right? So I spent, I started in early 2013 is when I found out, what a stock market was. And that's when I started reading a lot of books. And over a couple of years, I read probably 20, 30 different books, Buffett and Graham and all that stuff. And then I have followed, 30, 40 blogs for years. And I spend maybe 1 to 2 hours a day. Like I take the train to work. It's 30 minutes each way that I spend reading either filings or press releases or whatever, looking at charts of different stocks. And then whatever other time I have during the day, lunch break maybe, or the kids are falling asleep. And so even though I spend less time now than maybe I used to, it's all like cumulative. It gets easier and you can think faster. But something did change. Like my first few years, I was not investing as I am now. Gotcha. So where my performance really changed is when I really changed my process to what I do now, which is these dark stocks, diversification, going for these really, really small companies that no other people are looking at. Also, at that time, I put a very large percent of my portfolio into one stock that has since been an amazing home run. And that's driven a lot of it specifically. So I'm kind of curious what happens the next 4 years without that stock.
So the stock you're talking about is HemaCare Corporation, right?
Yes.
So have you looked at your performance without that stock? Like tried to think about what your performance would have been without HEMA?
Not cumulatively. I should do that. Each year I write a post that's my annual return, my portfolio's annual return. And then, since my performance started doing so well, I started quoting in that post also, like, what was my performance without HemaCare? Because people ask, like, you're so heavy on this one stock. And what was the last 3 years? I've kind of been around 100%, I guess, 80% the last 3 years. And without it, it would probably be half of that, I guess.
Yeah. Well, you got a nice boost here at year end. So we're recording this on December 16th, 2019. And of course, this morning, We had this scheduled, of course, weeks out, but this morning HemaCare just got bought out at $25.40, and it's up 25% on the day. So it's being bought at $25.40 per share. Do you have an idea of how much your average entry price was for this company?
So I first bought HemaCare in the summer of 2015 at like 30 cents. Okay. And then I bought it at what position size I was comfortable with, which was 5% or 10% of my portfolio. And then it went down after I blogged about it. So I bought some more. My lowest buy is probably a quarter. And then over the next 6 months, as I had more and more money to invest, which came from I was just taking over more and more of my retirement. So now I invest all the money for my retirement. When I started out, I just took a little chunk just to get my feet wet. And so over time, I was just like taking over more and more into buying my own stocks rather than sitting in mutual funds. And I used to, every couple of weeks, I would look at, okay, I'm going to take over some more of this and buy something. I would look through the things I thought I might buy, and HemaCare was also always looking the best. And so I'd buy more. And then 2 weeks later, I'd buy more and buy more. And eventually I cut myself off when it was like a third of my portfolio. And that was when the stock was, I don't know, at 50, 60 cents. So I think my average price is somewhere around 50 cents.
50 cents. So that's, so from your average price, you're looking at a 50x return. I mean, yeah. You're looking at a 50x return from there, and then you're an 84 bagger from your entry price at 30 cents. And this is in 4 years, basically 4 years. That's pretty good.
Yep. It's amazing. So, when I was buying it, I was thinking like, man, this one really has the potential to be an amazing, long-term cornerstone of the portfolio, and it delivered.
So what drew you to that? I mean, because I think this is the piece that people will want to know and kind of learn from is when you looked at HEMA, you're saying this is going to be an amazing long-term investment. And really the question is like, why? What made you so excited or confident to put a third of your portfolio into it when you're just talking about, you own 60 stocks?
Yeah. So at the time, I probably owned 30. As time goes by and I hear about them, I buy new ones. But whatever. Sure. I mean, the point is still the same. But so there's a couple things. So I'm looking for stocks generally that are cheap by the numbers, right? So I don't look at growth stocks. I mean, I don't really try to assign the right multiple. I just look at 5 minutes on the balance sheet and the income statement, and I look at revenue and book value and income, and that's about it. And then I'll look at what's cheap based on those, just for like value wise. But then beyond that, there's like, what is happening with the stock? What is the perception in the marketplace? Which is why you look at the chart, right? And then what is happening with the situation that might cause an inflection point or a nonlinearity? Like the Greenblatt's book about looking for changes is really what I'm often trying to do. I'm looking for stocks where there's going to be some change, or there was some change, and then you'll see the price take off. And on HemaCare, it was there. Everything was adding up. So HemaCare had, previously they were a blood bank, and the stock was at a few dollars a share, and my friend owned it. So I heard about it from my friend, who's my mentor. He had owned it forever, and it was a few dollars, and they were just money losing blood bank. And then things started turning south, and they were losing money, and they started selling off divisions to survive. They got a new management. They deregistered from the SEC, and the stock price went from a few bucks down to like 10 cents was the low, and somewhere around there. And so the perception among the public is this thing is dead and it's dying and it's done, right? And you can see them trying to survive because they were selling off different divisions, and no one knew really what they were going to do with it. They had a new CEO, but there was a big question as to the future of the company, and they deregistered. And when they deregistered, they said they would continue filing or keeping people up to date with like annual financials, or maybe they said biannual. I don't remember. But at the time, my friend only knew that they were changing because he went to their annual meeting, because they happened to be in LA where he lived. And so he went to the annual meeting, and there was no one else there. And they handed out a piece of paper that just gave some stats on their new business. So after they deregistered, they kept communicating for a while, but then they stopped. So they hadn't talked to the public for almost 2 years. And this is when I heard about them. And so at that point, if you have a company that everyone thinks is dying and they're not communicating anymore, the stock has dropped down to like all-time lows. It's in the trash. All that has to happen for that stock price to come up is if they communicate. Like, if there's just some hope for life, then the price will come up. Because right now, everyone thinks it's just going to die. And so when my friend went to the annual meeting, they gave him just some stats. They announced that they had sold off one more division, and they had started a new division, which was this bio research. And all they said was like, we entered into bio research a couple years ago. We added X amount of customers. Their revenue had grown. Like in 2013, they had entered into bio research for 8 months, and they added 100 customers, and they had 1 million in revenue. The next year, they added 99 customers, and they had 4.5 million revenue. And then this was in the middle of 2015. Year to date, they had added 34 more customers, and they were on pace for a double in revenue. And so I see this, and nobody else knows about it because nobody else went to the annual meeting.
Yeah.
And the only reason my friend knows about it is because he had owned it from before it went dark. So it had shrank, and he just kept following it. And then he tells me, oh, Hema Care has changed, and you should check it out. And so I read this stuff, and it has everything, right? It has like, the company was basically a self-funded startup. They had no debt. They funded themselves by selling off these divisions. The market cap, when I looked at them, was like 3 million. And they had just sold off a division for 5 million or something like that. So the cost was like less than the cash they had. But there was all this uncertainty because they hadn't communicated in 2 years. So my investment was basically, if they can keep growing this new division, and if they keep communicating, the stock's can be a home run. And sure enough, a month later, they did come out with the annual report they had said they were going to. And they did put out a press release that they closed on the sale of this last division. And so I bought some more. But the stock price still wasn't moving very much, and because no one's looking at it. So then over the next couple months, they put out a few press releases. Like they signed some distribution agreement in, I forget if it was Asia or Europe. They signed some agreement with like a cold packaging company so they could ship their product all around the world. And so each time I saw these, it's like they're following through. So I'd buy more and I'd buy more. And business kept growing. So I would buy more. And it was these things. So they disappeared to reinvent themselves, and they were successful. And I happened to catch them when they were in this dark period before anyone knew. And I just kind of have ridden it up the reincarnation.
So you're going to take your friend out for a steak at least, right?
Yeah, I mean, I give him a lot of thanks.
But so, I mean, I think the interesting thing, so you're talking about, okay, I'm buying more, you're getting these press releases, but this is still all in the 50 cents range. Like, this isn't taking off, right? It's still like, oh, the business is performing, but the stock's not responding, right?
Well, the stock, if you think of percentage wise,
it's still like 100%. Yeah, I guess.
Right. So the highest I bought was a little over $1. So the stock had tripled.
Okay.
Most of my buying, I think, was in the 40, 50 cents in that area. And then I eventually, like, the position was so big, I just told myself, like, I can't. So
then I understand not buying more if your position's so high. I mean, you bought it, you're maybe third of your position, and it just keeps growing. So But how do you manage not to sell the company when the price is rising exponentially? I mean,
Yeah, that's hard.
I mean, like, because if you think about how this performance works, so if you say you got is 50 times your investment or something like that, and that drives a large part of your return, your portfolio return could be attributed in large part to your ability to hold on to your HEMA stock. So I'm just trying to think, like, did you ever consider selling it all, when it hit 10 times your investment? What was the thought process over time? Or were they continuously outgrowing? Like, did it stay cheap, or did it get more expensive over time?
It changed for sure. I mean, at the beginning, it was like a deep value stock. Like, it was cheap just on the balance sheet. And they also had this aspect where they were coming back to the light. And they also had this aspect where they had this growing new division. So at the beginning, it was just a no-brainer. Like, this thing is so cheap. It's just that no one could see it because they were dark and they weren't communicating with anyone. But then over time, they got more. Then they kept putting out financials, and it was like, man, this thing is growing and it's almost profitable. It's going to be a huge hit once it's profitable. Then it gets profitable, and like their leverage kicks in, and it just keeps looking. It never looked super expensive, right? It was no longer cheap in the same way, but it never looked really expensive, and they just kept executing. So I would be like, man, it's working out so far. I should just see what happens, and then it would look good again. And on top of that, some people like, I talked to my friend who also owns it, and he would be like, man, it just keeps looking good, and I don't see how it cannot work out. And some other people, Daniel Smoke at Microcap Club, researched the stock very heavily. He went way deeper than I do when it was around $1. And he and I talked. And so his confidence and his further deep research gave me more confidence. And then along the line, Alpha Vulture wrote it up, who was like one of my all-time favorite blogs. And again, his confidence gives me confidence. And then it just kept going. And after a while, it's just like felt it's like part of me, like I can't sell this thing. It's like it's my stock. And it just kept looking good. Now, that being said, I did sell a few times. So I have a few different accounts that I invest in. I had one where I was trying to capture just short-term gains because it was kind of like a savings account that I wanted to keep without cash. So I did buy some like at 50 cents and sell at $1. One time I did sell when it was like at 350, around that area, because it grew up to be like 65% of my portfolio and it was just too big. So I sold it down to 50. And then last year I did sell some like at 12 or so because we bought a truck and a trailer.
Yeah, I mean, that always makes sense. Certainly selling for, well, you gotta live, you gotta do, just life. You spend money. So I guess that's interesting. This idea is it's my stock. So when you sit there, I mean, do you think that could have led you to a negative outcome in the sense that you got so invested in it? Like, obviously you look at it today and it's successful, but
it could. One thing I'm looking at right now is like I've had a number of stocks that went up and then just came back down, and I didn't capture any of it. And so I'm trying to think about other ways to sell. But I do a lot of my selling. I do just totally based on the technicals, like on the chart, on the volume.
Okay,
it's pretty rare I sell based on like a valuation. And so if it never, like a lot of times what I'm hoping for, and usually what I sell into is like a big spike, like maybe a press release comes out or some good earnings, or maybe it's nothing at all and the stock just moves. But a lot of these stocks, like I said, I'm looking for stocks that will move a lot. So low price, low share count. And so I'm looking for ones that will move easily. And a lot of times they do. And that's when I sell. So if something doesn't ever take off, like a big 200% jump or something, I'll just keep holding it. And so there's been, Buy America is one, BMRA, that I bought at $1.50. It went as high as $9. Now it's back down at $3. I've never sold it. I've bought more, but
yeah,
And there's others that are like that have gone up. QuadLogic, QDLC, I bought it, I don't know, 20 cents. It went to $1.20 or something, came back down. I never sold any. There's others. So it's something I can certainly improve on.
So as you think about then HEMA and your portfolio, so you just hit basically a major liquidity event. I mean, how do you think about that? You know, I mean, do you think, I mean, are you sad that HEMA got bought out, or happy with the premium? I mean, what are you thinking about today? You got the news that you got 25% on the day, but now you basically have, I assume it's still over half your portfolio that you have to allocate.
Yeah, it's a lot. Yeah, it's over half for sure. I don't know. I'm happy and sad. Like, I'm happy, obviously, that I've had this stock that went from 30 cents to $25. Like, it's amazing, and I played it well, and so I'm happy about that. At the same time, I think it could have gone for more. And in the back of my mind, I'm thinking if they wouldn't have sold, if they just kept operating, the stock could have gone up. But at least it guarantees me a really good return. I'm also, as far as allocating the cash, it's really going to take a very long time, because the stocks I look at are so illiquid. I don't even know how I'm going to put that much cash into these stocks. So I have to think about that. I'll probably end up, my 60 stocks will probably end up being 100 stocks.
So that's where you'd approach it, is just go more and more companies instead of changing your strategy then.
Yeah. I mean, because basically when I buy all these stocks, and every time I buy, I think this thing is so amazing and has so much potential, and this stock could go up 10 times, like just every time. And I don't know which one will work out. Like sometimes, like Hema Care, or there's certain ones that I think, like, man, there's this event that's coming up, or this aspect that I think this one particularly is going to work out. But for most of them, it's like they all kind of fit this style, that they're cheap and they're low priced and they're tiny and they're struggling and the world thinks they're dead. And if they're in that bucket, then I kind of look at them like, that's cool, I'm going to buy it. And then I don't know what's going to happen. So from that point on, I'll buy more based on, like, if the price falls and it still looks like the company's not going to die. But yeah, I think if I had more of those, like if I have more stocks that all look like that they all look like they have good potential, then I think I want to buy them. Yeah. I mean, like my mentor that I talk about, he has something like 400 stocks.
Okay.
Now, I don't know how many are dead. Probably, I don't think he knows. Probably half of them are dead, but
yeah. Well, I assume he's also sitting on a pretty nice gain from HEMA, so he has a similar issue to allocate this. So it's just very interesting, trying to figure out what you do and how to replicate that. But it sounds like you've got a good strategy on at least going forward. One piece you had mentioned to me is you wanted to talk about CLSI. Could you tell me the story on CLSI?
CLSI is a crazy one. So, CLSI is Clancey Systems International, and the stock sits at 2 cents right now. It's one that a blog reader told me about. Another guy who we've emailed back and forth a number of times, and we like similar companies, and so we were just talking about stocks, and he said, "Oh, you should check this one out." It was dark, which fits in my wheelhouse. They're like a company in Denver, Colorado, and they do some kind of parking systems. I don't know. They had deregistered like 10 years prior. Yeah, you can tell how like deep I go into business. Oftentimes not. So they had deregistered. A lot of times I'm looking more at the situation, not what the company does. As long as they're not in a dying industry, then it's okay. So they had deregistered like 10 years prior, and they stopped communicating. Nobody knew who they were. They stopped filing. They didn't send out anything, but they had a separate website. If you go to Clancey's, if you Google them, you'll come up with their main website that shows their products. And you didn't know that there was this other site, Clancey Systems Info.com or something, where they posted an annual report that probably nobody in the world even sees because that's the only thing that was there. ClancyInfo.com has their reports, but nothing else. And they don't link to ClancyInfo.com anywhere. So they're putting out these reports and not really telling anyone. No one knows they're there. And the interesting thing is, so he tells me about it, and the stock was at like 0.15 cents. So $0.0015. And so the market cap was something like $500,000. But they had they had no debt. Their revenue was $1.5 million. They had like $2.5 million in cash. And so you look at it, it's just like, this thing is super cheap. It's just dark. No one knows about it. And then I read more about it, and it turns out they own their building in Denver outright. They have no debt, no mortgage. And so that's probably worth over another $1 million. So I'm looking at it, I'm thinking like, man, this thing is it's probably worth like a cent, and it's priced at a tenth of that, right? It's priced. So I start buying, and nobody was talking about it. There was nobody anywhere. So I'm buying. Over the course of a couple months, I was like most of the volume, and no one's talking about it on Twitter or on iHub or anything. And then someone posts on the iHub message board that the number of shares outstanding has gone down from 300 million to 200 million. Now, I normally I don't like this many shares outstanding, but like the stock was just cheap. And so someone posts and the stock starts moving. And then a few days later, someone posts on Twitter or on iHub, I forget, they tied it to this guy, Robert Zhu. He had some website, and he's some guy who like helps Asian companies come into the US markets by taking over tickers. And if you just like looked at his name on Twitter, the other tickers that are mentioned all like went to the moon, just on like, they're all crap. They're all junk. But and I saw one of them, he actually did follow through and file SEC filings, and he gave himself like 100-to-1 voting shares. And, there's got to be dilution coming and all this stuff, but like the stocks would move like crazy. And so somebody posted that. So he had on his website some information about like stocks he was looking at, like number of shares outstanding, incorporation date, those kind of things. Like, this is my stocks that I'm working on, stocks 1, 2, 3, 4, 5, but he didn't name the tickers. Someone pieced together that stock number 2 was Clancey. So they posted about it. And once they post about it, all these Robert Zhu followers just start loving it, and the stock just starts moving. It's up 200%, 300, 400, 500% like the next day. And like nothing happened. And like, it was interesting seeing all these people all of a sudden on Twitter. It's just like CLSI. And then on the iHub board, it's like a post every 3 minutes. And the stock goes up. So I start selling some. It goes up over a penny, which is what I thought it was worth. And then it kind of comes back down, and I'm just waiting so I contacted the company, and their investor relations goes through to this woman who's the co-owner. It's this husband and wife. And I asked her, like, what is going on with this? And she said, oh, we've had a merger. And they didn't put out any press release, right? We've had a merger. There will be information coming soon from the new company, but she can't tell me about this new company. All she says, they were approached a few months ago by someone who wants the ticker. And she owns like 40%. And then they got together with some other large shareholder to go over 50% to vote for this. And the crazy thing is what they got in return. Like, so this guy got the ticker, and that's it. He didn't want anything else. The husband and wife who owned 40% of the company, they got the company, they got all the cash, they got the building, they got all the operations for nothing. All they did was give up their shares. So they gave up, that was the share count reduction that someone noticed on OTC Market.
Oh.
So it's like the weirdest transaction ever, right? It's just like some random guy comes up and I want your ticker and you can keep the company. And then they all vote for it and say, yeah, that's good. And nothing comes out to any shareholders. No information, no proxy. Clancey, the company that is now owned by these two people, never put out any information. But now the stock is up 10x. And so she tells me this, and I'm like, okay, well, once this guy actually puts out some press release or something, it's going to shoot to the moon even more. So I'm holding it, even though I think it's like fair value, and I'm up quite a bit. I did sell some. And so she tells me like, oh, it's going to be I don't know, in 3 weeks, we estimate he'll come out with these filings. So I wait for that. It comes and goes. The stock is kind of moving a little bit. Volume is way up. And there's tons of people just talking. And it's interesting reading what these people are talking about because they don't even know the company. All they know is there's this like momentum. And this person they follow on Twitter is talking about it. So that means they're talking about it. And I'm looking at it and it's just junk. It's just crap. Like now this new guy owns the ticker, but there's nothing behind the ticker anymore. Like they've separated already. He has this ticker that's not connected to a company. There's no way to value it. It's total just like, what do you think is going to happen? So I waited a few more weeks, and then I said, like, I thought he was going to have these filings, and the woman said, oh, now it's going to be another few weeks. And so at that point I thought, okay, this is crazy. Like, I don't know what's going to happen, but it's up at 2 cents or something. So I sell it, and I'm out of it for like 1,000% gain. So I bought just under 0.2 cents, and I sold around 2 cents, like average. So it's a great gain. And I'm happy with it. But then I'm still watching it, right?
Because you have to know.
It's just like this thing's crazy. Like something weird is going to happen. And it ends up going all the way up to 10 cents, just on nothing, on absolutely nothing, just on these idiots just pushing the stock. And I'm just like, man, if I would have held it, like I couldn't hold it, but if I would have held it, like I would have been able to buy a house. It was just like, it's crazy to sell something for 1,000% and it's total crap. And then it goes up another 5x from that. And it's still sitting like at 2 cents, and I don't really follow it anymore, but
so
that kind of weird stuff happens.
So, man, that's a lot to unpack, but, so one, I need you to send me the name of this guy's website if you know about it later. You can send it to me, because I'm gonna have to read it. I mean, it just sounds like this is just like fun reading time. But back on what you were saying, so he's at the time that this guy merges or takes the stock, basically you don't own anything, right? You're like a part owner in whatever shell company this guy has.
Yeah, it's just a ticker. And it's a share structure, but the operating business and the cash and the real estate
is all gone.
Detached. It's all gone without any vote. I mean, they voted between themselves, but they didn't tell shareholders at all. And the SEC lets this happen because they let them deregister. And
and so you have this company that basically is gone. So you don't get to keep a part of that company that's gone. It's just did some. So how do you not sell right away? I mean, I guess this is why I don't deserve the 1,000%. But
I just like
at that point you're just like, well, whatever.
Well, no, I mean, you're looking at the chart, and like I've read a number of charting books, and I've looked at a lot of charts, and you can kind of see the momentum building, and I know that there is. You combine that with like, I know this guy is going to, well, I don't know for sure, but like, it sure looks like this guy is going to communicate at some point with some filings or whatever. That's what pushed it up to 10 cents. He finally like filed something with the state of Nevada or something. I forget what it was, but he finally did something, and people just went nuts and pushed it up to 10 cents. So it's like what I thought was going to happen happened. I just didn't wait long enough. I mean, I still captured a really good gain, but it's totally detached from the value of the stock at that point. And so a lot of times that's what I do. Like after I buy the stock and I think it's cheap, and over time, maybe it doesn't look so cheap or whatever, but you're just kind of looking at what's happening and what do you think the public is thinking, and then what do you think the future holds?
Yeah. So, I mean, how big of a percentage of your portfolio do you put into something like this? I mean, I know when you got started, you obviously didn't know that this was going to happen, but like, I mean, is this again just would be like 1/30th of the portfolio, 1/60th of the portfolio type thing?
I think that one I've made a few percent.
Okay.
Something like that. It always depends. Like it's always like how much cash do I have and how much stock is available. And Yeah. Like right now, I still have cash from that event that I haven't reinvested because it takes a long time. And after I get the cash from HemaCare, it's going to take a real long time. But mostly I've been fully invested, like 100% stocks. And then like when I was buying Clancey, I was selling other stuff because I was like, I think this thing is worth 10 times or whatever what it's at. This other one, I'm not quite sure. So I'll sell that and buy this one. So a lot of times my position sizing isn't so much what I want it to be. It's just like what I'm able to do at that point in time.
That makes sense.
So it's also like how much of the stock is available to buy. Cause like a lot of these ones I look at, they're illiquid. So I can only get. Are you still there?
Yeah.
Oh,
we kind of cut out for a second, I think.
A lot of these stocks, like I can only get, so much, and then it's just there's no one else selling.
Gotcha.
So it all depends.
So, I mean, with these shares at these really low prices, I mean, do shares trade every day, or are there days where there's no trading?
Oh, there's long periods of time with no trading.
Okay. Yeah, I mean, that's what I've seen with other companies that I own that are dark, is there might just be, a month, 2 months with 0 shares traded.
Yeah, for sure. Yeah, there's some stocks I've been trying to buy for years.
And just can't get anything.
Yeah, or sometimes you get something, but it's like a little bit, and like I would want more.
So how long did you own Clancey before this craze started?
Oh, I got really lucky because I was still buying. I hadn't finished. That's why I never wrote about it.
Oh.
So I was buying, and that's also at that time in the spring, I got kicked out of one of my brokerages. I was with Pentrade. I had a few accounts, and they like shut down. And they were moving all the accounts to like a full service broker. You got to call in and everything. And I didn't want that. So I transferred out of there over to Schwab. And so at that same time, I was like, I wanted to buy shares of Clancey, but then I was also transferring accounts. And so I only held it for a few months.
1,000% gain in a few months. That's always nice. The crazy part I'm sitting here when you talk about that 1,000% gain, it goes up another 5x, is you could have basically had a Hema Care in 3 months and the company was, one's worthless and the other one's getting bought for $380 million in cash or whatever it is.
Yeah.
So we have a little bit of time left. Of the three, or let's say of either Dewey Electronics or Dynasil, which would you want to talk about?
Dewey.
Okay. Tell me a little bit about Dewey.
Dewey is like, when I talk about some companies do survive, these small companies over decades and decades, that's Dewey right there. Dewey's story is really like, decades ago, they had one big contract and it was manufacturing, I forget what, for military. That's what they've traditionally done. But they had one product specifically like torpedoes or something in World War II. I forget exactly, but they existed totally on that. That was all their revenue, 80% of their revenue or something. You can see it in the stock, like the stock goes up, and then that dies off as like the war is won or whatever happened, and it starts going down to nothing. You can see the stock go down to nothing. And then they reinvented themselves manufacturing diesel generators for the military again. And then you see the stock go up and up again, and then trail back down as that went away. And so I bought Dewey a few 2-3 years ago, and it's as the stock was down at $1.30 after they had deregistered. So what caught my eye was they deregistered and the stock lost like 30% or something, because like sometimes that happens when the companies deregister. But at the same time, they were deregistering to save money because their main revenue source, which was these diesel generator sets, that thing is dying because the government was just buying less of them. I don't know exactly the reason. Maybe they don't need any more or whatever. But at that point in time, I'm buying Dewey. They were basically this small, struggling company trying to survive, and I talked to the CEO and he painted that picture, just that they were transitioning, and they're trying. A couple of years prior, they had acquired some other small company, and they were trying to diversify their revenue base away from this diesel generator set, and just trying to survive. And so it was one of those where you look at it and it's like, well, if this company is just here another 10 or 20 years, somewhere along that line, the stock's gonna be a lot higher. And I think they're still going to be here because they had this real estate. That's like kind of the kicker on Dewey, and that's one reason the stock is up recently. They're in New Jersey, and they own, I don't know, 100 acres or something of land, and some of it is what they have their buildings on, but then a lot of it is this undeveloped like countryside. And they started trying to sell it like 15 years ago, or I don't know how long, but they ran into snags because some environmental protection law, like they butt up against this area that's like some kind of wetlands that the state of New Jersey has reserved for like very limited development or no development without special permits, something like that, for like water conservation. And so even though they had a buyer offer them 12 million or something for that. I forget what the market cap was when I was buying it, a few million. And they were offered some 12 million years prior, but it fell through because the developer couldn't get the necessary permits. But when I was buying, I talked to the CEO, and he said they're still trying to sell it. Now that the law had been in place, they feel more confident that they might be able to finagle something and actually develop part of this land and sell it off. So you have this perception that the company's dying, right? The revenue has come down. Their main product sales have come down. They've deregistered from the SEC. So they've done everything they can to save money. And the stock price has responded. It's gone way down because people think it's this dead company. Like, why touch it? But then if you look long term, this company's been through it before. They were through this when they switched away from the torpedo to the generator. They probably were through it before that when they switched from whatever to the torpedo. It might not have even been a torpedo, but it was something. And then in the background, you have this binary event possibility of maybe a land sale, which is a bunch of just like unused land that they don't need. And so now fast forward to today, and they've saved, their numbers are looking better. Revenue, earnings, they've saved, I don't know what they estimated, like $500,000 a year just by deregistering from the SEC. Their strategy of diversifying their revenue base is working. And then also they announced probably almost a year ago that they were very close to a land sale. And so now the stock is up around $4 or $5. My buying was at like $1.30-ish, somewhere around there. But it sat flat for a long time. It didn't go anywhere for a couple of years. And then it's just taken off in the last 12 months, mostly, I think, because they mentioned in there, they still file reports just on their own website. But they mentioned in there about getting a real estate sale. And so I think that's been the main driver of the stock movement. So now I'm kind of just waiting and see if they actually sell it or if it follows through.
So that's the interesting part to me is, so you're saying you're going to, you kind of, is it because it wasn't like an instantaneous spike? I mean, when I look at the chart, and anyone else can pull it up with DEWY, I mean, it's certainly risen, the 200% basically in the last, like you said, 12 months. But you had previously said you like to sell into spikes. So this one just kind of, you think if it did sell, it'd go higher? I mean, why not capture this gain? I guess, is it not big enough, to really offset losses in the portfolio? Like, what are you looking for?
So there has not been a big event. First of all, there has not been the big spike. The big spike to sell into is high volume. So it's like a lot of these, I can't just go and sell it because there's not someone willing to buy as much as I hold.
Okay.
Right. So Dewey still, it rarely trades. Like, it's not trading every day. So it's not like tomorrow I can just go sell it for the price it last fetched. A big volume spike, what I'm looking to sell into is like something has happened and now like a lot of people want it. And so I can just sell like that, like just like hit an order and it's gone. And, but that's not there with Dewey.
Oh, okay. So this is being kind of driven up by low volume buyers.
Yeah, it's been like a bit here, a bit here, a bit there, a bit here, a bit there. And so I could sell. It would take a few transactions or whatever, which is not that big a deal. But at the same time, it's at 450 right now. I think it could be double that.
Gotcha.
I mean, it's really hard to say because there's no way to value this land they have because there's no, you can't say for sure if they can actually develop it. Like I said, like they got this offer, let's see, it was 18 million. They had an offer for 18 million that fell through in 2005. And the market cap when I bought it was at 2 million. So now the market cap is, what's their shares, 1.3. So the market cap is like 6-7 million right now.
Gotcha. So if they did sell it, it'd be worth it
alone. It could be worth like 2 or 3 times the stock price right now, or it could be nothing. I mean, it's hard to say.
Well, I mean, you'd mentioned way earlier on in this conversation how, kind of that little bit of the gambler in you. So you're kind of willing to, see where the dice roll instead of just taking the win, right?
Yeah. I mean, if it was closer, I would sell. There's another one I own, that the ASNB, that's trading around 15 cents. There's a buyout now for somewhere around 20 cents. If it gets closer, I would sell. But
yeah, I mean, because I guess
it kind of depends.
You also have the chance there that, 18 million 2005, if it's in, you said what, New Jersey, that maybe 18 million turned into 30 million.
Exactly.
And then
they gave some estimate in their filings.
Oh, okay.
And it wasn't as much as 18 million, but it's hard to say, why did they do that? Are they just lowballing it?
Gotcha.
Who knows?
Yeah, I mean,
but if time goes on and they don't actually sell it, the stock price will come back down for sure.
That makes sense. So I guess the operating business can't support, let's say, a $6 million market cap without
I would say
land
it's
sales.
Probably around fairly valued right now for the market, just for the business.
Gotcha.
But you have this other kicker with the real estate.
Okay. So is it often that the dark companies that you buy they're only dark to the SEC? Like, I mean, you're still getting the annual reports from like a website or something, or are they truly dark where you don't know anything?
I only have probably 1 or 2 stocks. No, there's a couple. I only have a couple where I really don't know anything, that they absolutely don't communicate. And there's certainly dark stocks that don't communicate. I just don't buy them.
Gotcha.
If there's something like, I usually will not buy a stock if they're not communicating in some form, unless there has to be something special about it. But most of the ones that I have that I've deregistered, they still communicate in some form. Some of them will just post on their own website. They have an investor relations section and they just put reports there, and that's all they do. Some of them mail out a paper copy. There's one I own, ADDC Admaster. They mail out a paper copy. They do nothing electronic, which is just ridiculous. There's some EKCS. The guy sends out a quarterly letter, in the mail. Just if you're on it's not even to all shareholders. I don't think you have to tell them you want to be on their list. So they do it in different ways. I would say a lot of them they deregister, but they keep posting reports on OTC markets.
Gotcha. Oh, so a lot of them are on the OTC markets then.
Yeah. They're all traded OTC, but a lot of them still communicate on OTC markets, even though, which is kind of crazy because OTC markets still might not recognize them as being current information if they don't communicate in the right way, or if they only do it once a year, but OTC markets once every 6 months. Yeah.
No, I know. I've seen that with some of the companies. I own this one company that they're like what you said about mailing out annual reports. Nothing online.
Yeah.
Or they'll have a website, but it's just products, basically. It's the sales funnel. Yeah. But then, of course, you ask for stuff, they send it to you. It's no issue.
Yeah, a lot of them are great. I'll talk to these guys. I've talked to a lot of CEOs, CFOs, and some of them won't answer anything, but some of them they love it, and they'll just chit chat and answer whatever questions you have. And
Yeah, I find it interesting because you mentioned Microcap Club, and I was, applying to join Microcap Club and floated the idea of one of these dark stocks that I had. Looks great, trades at 4 times earnings. They're doubling their earnings every year. And they're like, well, I don't, they're not OTC current or whatever. So, it's really not going to be a good deal. I mean, it'd be a trademark, how you feel about, it's not the same example, but kind of some of those feelings you were saying about HEMA is kind of, I'm like, well, they're, 3 years in a row, they've doubled earnings. They're trading at 4 times earnings. It seems like a home run. And they're like, it's not going to be approved as an application because it's a dark company. And I'm sitting there, I'm like, really?
That's ridiculous.
Yeah.
I would say that's too narrow a view. And
I mean,
that's the time when I would get more excited. Because, like, if those guys don't want to look at it, then who does?
Well, and that's what I'm saying. I'm like, this is a $4 million company that earned $1 million last year. And it's like, yeah, I don't know. I mean, I'm going to wait next year. And if they hit 2 million, then I'm not going to care that they can't post it on a Microcap Club, and I'll just buy as much as I can. But no, I find it interesting when you're investing in an area that people don't search for, how people put up barriers, I guess. So you don't have those barriers in terms of what you're looking for.
No, and I know a lot of people do. There's people who I only buy profitable companies, or they'll only buy if shareholder equity is positive or something like that. But I think you're narrowing your view. You can make a lot of money with a dead company that just doesn't die.
Yeah, I mean, the gap that I'm stuck on is probably the profitable companies. I really struggle with buying unprofitable companies. And if you look at enough of them, you'll see like a lot of them, they just survive. Like they don't turn a profit on average, but they'll keep going for 10, 20 years. So, I mean, how do they do that? I mean, do they need, or is it because they still have cash? Or
it's average. It's the average part of it. So they'll go, like I said, they'll have a year where they make a bunch of money, and then they'll just lose money for the next 3-4 years.
Okay.
But those are the ones where you can make a lot of money in the stock, because when they're losing all that money, you can buy it and it's low, and then they have this one big lumpy order that comes in. When that press release goes out, or when that quarter is announced, the stock price will double, triple. You sell into that, and then when people forget about it, you buy again.
So have you cycled through any companies over time? Like come back?
For sure. Yeah. There's one that I sold the other day, TCCO. That's one I've blogged about as well. I've bought and sold that, 3-4 times. And it's always like that. It's very lumpy. So on average, they don't earn anything. But they're low share count. The float is low. The stock price is low. It's apparently easy to manipulate, because I see you get these spikes that are 100, 200%. And I just, they come out with a press release. The other day, they came out with a press release about they had, earnings is way up and revenue is way up on this one quarter. But it's because they had some big, non-recurring orders that just came at that time. Mm-hmm. So, they earned a bunch of money for sure, but it's not recurring. It's not going to happen again. So I had bought when the stock fell, and then it shot up. I bought at $2.50. It kept going down to $2, and now it's over $7. It got up to $10 in the same day, that one day.
Wow.
So it went up 5x just on this press release. And it's not going to stay up there. It never does. And backlog is down. They put out the 10K following the press release, and backlog's down. Their accounts receivable is down, so it's not going to keep going.
Yeah.
So I'm just going to watch it. It'll come back down. I'll buy it again. And then they're lumpy, but they survive. And they're in high tech, military radio communications or something. So it's not an industry. It's not an industry that's dying.
Yeah. It's just very niche and lumpy.
Yeah. It's super lumpy. And those lumpy ones are the things that they have these good press releases. And those good press releases drive people, and there it goes.
Well, this has been a lot of fun. Thank you for coming on the podcast. Is there any can you just promote your work here for a second? How would you like people to touch base with you, your website, that sort of thing?
For sure. You can just Google NoNameStocks. You'll find me. My blog is at NoNameStocks.com, all one word. And I got my email in there. I'm also on Twitter at NoNameStocks. And if anyone wants to reach out, I'm all ears.
Well, great. Thank you for coming on the podcast.
Yeah, this has been fun.
Thank you for listening to the DIY Investing Podcast. Please visit our website and subscribe to our email list at DIYinvesting.org for guides, videos, and resources to help make you a better investor.
The DIY Investing Podcast is presented for general informational and entertainment purposes only. I have not considered your specific situation or risk profile, and I have not provided investment advice. The information presented on the DIY Investing Podcast should not be construed as investment advice. The views and opinions expressed on the DIY Investing Podcast are those of the participants and do not necessarily reflect those of the show's host or sponsors. DIY Investing, its producers, sponsors, and host, Trey Henniger, shall not be liable for losses resulting from investment decisions based upon information or viewpoints presented on the DIY Investing Podcast.